Oh, very good evening. We are in now with the almost the syllabus where the next concept is about risk profiling, how risk can be filed into position. So here, risk profiler tried to ascertain the risk appetite of an investor so that one does not sell mutual fund schemes that carry higher risk than what investor can handle. So everyone should know that why this risk profiling is must. So when we go for allocation of risk, what are the basic principle has to be found. So here risk profiler always ascertain the risk appetite to the investor. So investor should know that before buying what kind of a care, utmost care has to be taken into consideration, and who is the seller, what type of a mutual funds are sold, how long these funds are performed, what is the basic performance from the past many number of years. Then all this investor has to go through for mutual fund schemes, and what are the higher risk than what investor can handle it. So you should evaluate based on the following evaluation method. So you should identify the need to take risk, ability to take risk, or willingness to take risk. As an investor, I should know about what are the risks involved, whether I can take this risk, what is the purpose of taking this risk, or my ability or willingness to take risk. So the next slide talks about understanding asset allocation. So asset allocation is a process of allocating money across various asset category in line with the stated objective. So everyone should know that asset allocation is a very critical investment strategy where it involves dividing the portfolio among different asset, different classes to optimize the return, minimize the risk, and there are different types of asset management allocation. So the basic need of asset allocation will be returns, minimizing risk, and different asset classification. Networks we see asset allocation. There are two popular approaches to asset allocation, but there are multiple asset allocation too. So the basic asset allocation will be the strategy, and when it's come for tactical asset allocation. So here, now let me begin with the asset allocation. What do you mean by asset allocation? Why it is required? And asset allocation, I said, they are dividing into multiple portfolio, dividing the portfolio among the different asset classes, which will optimize the return and minimize the risk. And coming to the asset allocation management here, uh, first type will be strategic asset allocation. So this approach involves allocating asset based on the investor long-term goal. So people asset allocate based on the long-term investment goal, based on the risk tolerance, based on the investment horizon, then based on the typical static and kind of a frequent or frequency changes. Then you have a tactical asset allocation. This approach involves actively adjusting the asset allocation based on the short-term market trend or economic condition. Goal is to take advantage of opportunity, minimize the losses. That is called a tactical asset allocation. Then we have further rebalancing or dynamic asset allocation where it combines the elements of strategic, tactical asset allocation, and allocation is adjusted periodically based on the changes in the market condition, economic indicator, and investor goal. Then certain core, in case of satellite allocation, where the core allocation 40 to 60% were invested in the diversified portfolio, which is lower cost than actively managed fund or alternative investments. Then when it's come for risk parity asset allocation, where approach involve allocating asset based on the expected volatility, expected return, goal to create portfolio with more balanced risk profile. Then further I can talk about factor based in asset allocation. Then when we talk about factor based asset allocation will be like a specific factor like a value, momentum, size, or quality, or create portfolio with the exposure to specific factor or historical driven return. This is how it is classified. Then you have a alternative asset allocation where it go for private equity, hedging funds, real estate, or commodity market, or different goal setting diversified portfolio or potentially increased returns. Then we have a tax efficiency asset allocation. where it talks about taking in account tax implication of different investors tax situation. Then you have a ESG, environmental, social, and governance asset allocation, which has a strong environmental track record, avoiding a company with a poor governance. Then you have a customized asset allocation, which talks about a unique goal, risk tolerance, and circumstance. So these are the different approaches for asset allocation. I have shared this link, and this will be shared in your portal too. So you need to go through for after this explanation, all need to go through for this link and just go for fulfilling the task and just know about how asset allocation is done. So thank you all. We'll see you in next class.